Hello and welcome to another update video. Today we want to talk about a stock and we want to talk about SQM, which is quite an interesting structure that we're dealing with here. I want to take a look at the 4-day chart. I cover it because it is currently experiencing a pullback in a potentially bullish structure. That can be interesting, especially given the overall bullish look of the structure. We have a wave we're basically a wave A, which rallied, or which saw a rally between 2001 and the 2008 high. Then a B wave pullback, which is a so-called expanded flat. A low that formed then in 2015 was a B wave and paved the way for the start of a C wave rally. This is one potential. We can also label it, if we want to, as a 1-2 setup. Would have to find a way then, however, to label this move up here as an impulse, which due to the corrective nature of this structure is a bit challenging. However, it is purely an academic discussion. It can be labeled as an ending diagonal in the C wave, which is currently still unfolding, or it could be labeled as an impulse. It's technically possible, but then the only way I found basically reasonable is to label this here a wave 4 pullback of a lower degree, not the main wave 4, but of a lower degree. But then this would be very much constructed and very deep, be a wave 4, deeper than it would normally be, ideal. So I find it more reasonable to label it as a 1-2. The wave 2 bottomed at 1530 in 2020. That's wave 2 of C. And then the third wave is basically unfolding as an A, B, C, because we're dealing with an ending diagonal. That's the structure it takes. And then the C wave of wave 3 could reach sort of $142 to $209 next. Then we could get a wave 4 and a wave 5. So that's what I'm tracking. Also, the parallel trend lines can be observed. Diagonals often respect trend lines. But because we're dealing here with a diagonal, we have to be prepared for potential changes of the micro count. Long-term projection for circle wave C here, which started in 2015, would be $483. Now that's not guaranteed. That depends on the successful that the price respects the support zones successfully. We are currently in such a support zone, so we're going to zoom in now. Invalidation point for the bullish thesis is $15.30. Now you can say that's far away. Well, it is, but considering the potential distance long-term to a potential target of 483, well, it's a pretty decent reward to risk ratio, even if you just, let's say, assume the price might get to 209 or something into that region. And I mean, normally everything with a reward to risk ratio of 3 plus is considered decent. So even if you assume it only goes all the way up to around about $120, it would still be a decent reward to risk ratio if the stop was set below $15.30. So it's a decent reward to risk ratio. Let's take a look at the shorter time frame. Daily chart reveals the move down seems to be a corrective move. Lots of overlap. That's good. That makes it a corrective look. We have likely this B wave pullback unfolding now. It might be finished. We have an A, B, C. The C wave could have completed because it's a 5-wave pattern, as you can see. And looking at the Fibonacci extensions, if we consider the length of that circle wave A, we go to the high of circle wave B to get some targets for circle wave C. Well, it definitely did enough. So it moved down to the 200% extension. That's already quite extended for a C wave. Then we can also take the wave 1 length, and we add it to the top of the wave 4, and it reached the 100% extension at $40. It's pretty much a complete wave count, which also reached ideal targets. The 100% extension is an ideal target for a wave 5. So that's what I'm watching at the moment. It could be complete. I cannot confirm that the low is in, that we will only always know afterwards, but I can highlight that there is a good potential. First of all, a good potential the low is in already, but then definitely a potential to watch this support region here for a potential reversal, medium-term, long-term, for a medium-term, long-term rally. Here, $41.99 is the first line of support, then $33 and $23.46. Also consider the ascending trend line. And yeah, looking at just wave C of wave 3, just looking at this itself, then we can take the length of the A wave, go to the low of the B wave, and here actually the 1-to-1 ratio is a common target and might take us to $290 just in wave C of 3. There are obviously different ways of calculating targets, but they all point to decent levels. And obviously it all depends on the successful, that the price successfully maintains above $23.46, but certainly $15.30. That's the invalidation point. It's just that below $23.46, probabilities already turn to the downside, you could say, and shift towards the bear case. Yeah, that's basically what I'm watching here at the moment, yeah. And don't think there is much more to add. Just want to make you aware of this potentially interesting setup. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, please check out the Stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.